I don't know if did we talk about that last week? Because honestly, I don't remember if we did. No, we did. We definitely did, because we talked about how this low wasn't taken, how Thursday's low never took that Tuesday low. We talked about that. And NASDAQ had very, very similar story. Oh, look at this. Consolidation, manipulation, distribution. Super classic. Look at this shit. Look at this. Look at this. What a beauty. Well, I mean, it's a little shaky, but you get the overall picture here. Consolidation runs up for, I don't know why, the PM, like the Sunday evening. Like, who trades on Sunday evening? But I'm not gonna argue against it. That same high that we just saw in S&P, right? Taken. There's your break of structure. Well, 1 minute break of structure probably, but there's your like displacement, right? There's your imbalance, and then that's just clean. I mean, look at that. Look at that. That's just gorgeous, man. That's just gorgeous. You know what I mean? You know, who needs Playboy magazines when you got this type of shit right here, bro? Come on. Look at that. I mean, do y'all not agree? Look at this. Barely spends not even a full 5-minute candle within that imbalance and then rips to the downside. 14,963. I believe we did talk about that on Friday. I'm pretty sure we did. And then you see some lower imbalances as well. I think that's what it's recently trading into right now. I haven't looked at it today. So this is the first time I looked at NASDAQ today, but that's where it has resorted to. So I will ask you this real quick too, for those of you that are taking notes. There is a question that, well, I don't really get asked this a lot anymore, but this was a question I used to have, and I want to share the answer with you. So the question is, how far can price go beyond equal highs or beyond equal lows, right? Because sometimes I used to just TP right at the lows or right at the highs, but I would see price extend above the highs or below the lows, and I'd go, well, shit, man, flop the exit again, flop the exit. Like, what am I doing wrong? And the answer to that is a lot. Well, number one, higher time frame bias, higher time frame concepts. That's number one. But number two is the like concepts, like say an imbalance right here. Okay, an imbalance below old lows. Okay, an imbalance below old lows. That's usually where price will extend to. All right. So if you took, you know, if you have the low like right at 14,964, whatever it is, and then you TP right at 14,964, it's like you got to expect that there's a high likelihood that it's going to extend past that. And for me, it's usually going to be an imbalance below that. All right. So look what price has done today. Straight from that imbalance here to that imbalance on a 1 hour time frame. This is what that is. So whenever you study charts, back testing assignment, I guess you could say, study these things, right? If it were me, I mean, I wouldn't print it out with the boxes because, you know, I'm not going to waste that kind of ink. Ink's expensive, man. I don't care how much money you fucking have. Ink is way too much. Okay, so there's that. But there's a 5-minute time frame. And then what I would do is mark up the 1 hour, like right here. Like this right here would be a perfect printout to study. You could obviously put the time windows on here too. Like the 8:30, our opening price, which is here. Right there. Yeah, I'd probably label that too. That looks good. Just like this. This right here, I would study. Like no shit, I would take this, don't do my chart, but like your chart, okay? I would print this off right here, and I would put this on my fridge, or you get it laminated. I have a laminator, You know what I mean? I laminated some social media stuff, YouTube shit. And I would laminate some really clean price action like this. And I would just look at it every day. Look at me. Before I go to bed and right after I wake up, I would review it over and over and over again to remind myself higher time frame concepts, higher time frame liquidity, small time frame entries. Like, dude, you look at what we did Friday. I know there was only we had maybe 20 or less people on Friday's live session. And that's okay. I'm not bitching about it. But we absolutely smacked the dog shit out of S&P. We totally did. Now, remember, I did fuck up the exit. Yeah, I'm not hiding from that. But this right here, what I just showed you on NASDAQ, right? That was the same thing we did on Friday right there. Almost no drawdown, straight down. Greatest trade you could ever take. Honestly. Real talk. Best trade you could ever take, have no drawdown, and they run straight to your favor, right? That's the trade everybody wants. Everybody's first question is, where's the market going to go? Well, when you answer that, the second thing is just about now timing it correctly. Because if you shorted too early, maybe you got stopped out and then it ran. Okay? Well, you goofed up. But when you get the timing and direction, you get the absolute most fire trades. Elite status. Okay? That's what we did on Friday. But that is also what has happened today, right? Look at these levels here. What's this lower gray box? If you weren't here on Friday, that's all right. You should have been. You should have been here, but it's all right. We talked about this. If you go to the daily time frame on your chart, I would hope you look at your chart. June 12th. All right. You have June 9th's high. That was a Friday. And you have June 13th's low, which was a Tuesday. So that high and low, right? There's your imbalanced candle. And look what that traded into today. We were looking for that on Friday. I didn't time it correctly. I didn't. I told you I'm not the greatest at that. Sometimes my timing is just off, and that's imperfection. Okay? That's just human. I mean, I don't know what else to tell you, man. I'm not perfect. I wish I was, but that's not the case. But anyway, that's where those levels are derived from. And you see what the market did today. Well, micro didn't have equal lows, but the E-mini did. So you notice right there, it's confluence of what? Equal lows and that daily imbalance. Blessed. Okay? So you want to learn where the market's likely to go. I answered that for you. Lower time frame entries, answered that for you. How far is price going to go below equal lows? I answered that for you. Or above equal highs. It's only been 40 minutes. So hopefully you got some value, man. If you guys got some value, drop a like on it. I would greatly appreciate that. It helps me, which in turn helps you. Know what I'm saying? The whole basis. Okay, I was writing some notes earlier. I was writing out some lesson plans, and not that I'm going to give you everything here today, but at the fundamental level, okay, of how I trade is, to simplify it in the most effective way, is the markets are controlled. All right. The market moves from liquidity to liquidity and from imbalance to imbalance. So the market is either reaching for liquidity or reaching for an imbalance. And then in between there are the opportunities. So point proven, what happened today? The market did what? It reached for liquidity. It reached for imbalance. And then it reached for liquidity and an imbalance. So I may not short the high. I might short in between and exit in between and try to get the bulk of that move, or 50% or more, like we talked about earlier. That's what I'm looking to do. But at a very fundamental level, this to me is not someone who is shorting the market or selling their shares or doing anything like that. This right here, that 5-minute imbalance right there, that to me is algorithmic. That to me is showing that something, some machine or machines, whatever, fucking Mr. Smith is manually, all right, the computer is taking price and repricing it higher, no matter how many people are buying or selling, no matter anything. It could be George Soros going deep, okay? I think price would still rally up here because I firmly believe that it is algorithmic. And that's why I trust the imbalances. So if you know the mitigation model, you know exactly why that shit is powerful. You don't really see the mitigation model here, at least the way that I teach my model. Back from Friday, this right here, that is my trading model. This right here, that's my trading model, the mitigation model. That is my go-to. It's my favorite model right now. I mean, there are others, but the whole premise, okay, or like I said earlier, the fundamental concepts is the markets are manipulated. They're going to move from liquidity to liquidity and imbalance to imbalance. Study that. Study that. You're going to shit yourself. I'm telling you. Right? What happened here? It moved from what? Liquidity to liquidity. What did it do in between that? Imbalance to, well, I don't know if there's an imbalance below this, but this was a daily imbalance that we were looking for. You see what I'm saying? So at its very core level, price is not hard. Like price action is not difficult. Where traders get screwed up is either getting in too early, not holding on long enough, getting scared out of a position because they're looking at the P&L and not focused on the market, or they don't trust themselves, or they're in the shit for the wrong reasons. Like Counter-Strike, for example. I love Counter-Strike. I'm not the greatest player in the world. I mean, apparently I'm top 25% according to the video game measurements, whatever that is. But, you know, this is what I do. I play Counter-Strike, right? I'm pretty good at it. But to get better, I go on YouTube and I look up pro players like Simple or Summit or forgot the couple other guys' names. Pimp. I never really heard that guy until recently. But anyway, I look at these pro players and I look at these guys that give tutorials online. They go, oh, well, you know, these pro players, this is what they do. Their crosshair looks like this. Their crosshair placement, their movement, their positioning, the angles, like this is how they do things. And I'm going, okay, well, I need to practice that a little bit. So I go into what's called a workshop map, which is like with bots and stuff. It's not like a real game. And I practice these things. I practice my crosshair placements. I practice shoulder peeking. I practice other shit that you guys probably wouldn't understand. Okay. And I go, okay, well, I kind of get this. I kind of get that. And I practice it and I get better at it. And then I go play matches and I wipe the floor, bro. I wipe the floor. I mean, like I'm almost top 5 in every game I play now. Almost every game. Because I'm not thinking about winning. I'm thinking about crosshair placement. What's it called? The spread, the bloom rather, right? Because I use the AK more than anything else. So I know the spray of the AK. So when I shoot, I aim down and then to the left because I know the AK sprays up and to the right first, kind of, right? So I'm compensating for the recoil. I have all the other details, and that's what I'm thinking about during the game. So I win most of my gunfights. I cover really great angles, and I win. You know what I mean? Like I go positive like 9 out of 10 games. Why am I telling you this? You know, a lot of y'all don't care about video games. I get it. But how you do one thing is how you do everything. So if you learn the minute details, if you learn the fundamentals first, which I just gave you, what are the fundamentals? Price is controlled. It moves from liquidity to liquidity and imbalance to imbalance. As long as you time it correctly in the right time windows, your trades are going to be higher probability. Are you going to win every trade? No. Are you going to take losses? Yes. Just like me, I don't win every trade and I take losses because I'll get it wrong. I'll either interpret it wrong or I'll forget something, like not look at the electronic hours or the other shit we were looking at the other day. The regular trading hours or electronic, I might neglect looking at regular trading hours, or I might neglect looking at the ETS because I might be lazy that day or something. Personal, you're going to bring your own shit into your trading. You know what I mean? But at a fundamental level, that's what I'm looking at. Just the fundamentals, man. I'm not trying to super complicate everything. Well, let me get the 5 minute and then let me go down, to the 1 minute and then let me look at the 15-second. Like, I'm not always doing that. I don't always need to. So what? The 5 minute, you'll get 1 or 2 points drawdown. Big fucking deal. Sometimes when you keep it simple, simple can be powerful. And it takes practice over and over and over again. I have a 16-year badge on Counter-Strike, which means I've been playing Counter-Strike for a minimum of 16 years. Now, I didn't play every year, obviously, but I know the maps like the back of my hand. All the call-outs, at least on Dust 2. I mean, I don't know if you guys know that map, but I pretty much play Dust 2 only. So when you do the same things over and over again, it just becomes so ingrained into your memory. It's muscle memory, bro. When I go on to place a trade, it's muscle memory. I'm going to enter here. I'm probably going to have a stop either here or here. I'm targeting this. My risk is going to be this. My reward is going to be that.